Michael, thanks for joining me on the Fundraising 101 podcast. Super excited to learn more about you. We've worked together a little bit, helping you do some of these fundraising, but super excited to hear about your process on how you've done it. So, first question out of the gate, what is your name and what is your business?
My name is Michael Chernow, and my business is Creatures of Habit.
Okay. How many companies have you started before this one?
This is my third business.
Okay. How many of those have failed versus exited?
None have failed, knock on wood, and I've exited two, and now I'm working on not failing on my third.
I love it. That's awesome. So those past companies, did you fundraise for those at all, or is this the first company you fundraised for?
Yes, I've raised money for all three.
Okay, perfect. How much money have you fundraised in total for all three companies?
For all three companies, um, probably just under 20 million.
20. Wow, that's
Yeah.
incredible. 20. And so three companies, 20 million. How much have you raised for your current company? Is it
So for our current company, we raised about $4.5 million prior to our crowdfund that we just closed.
okay?
Yeah,
So that was
so
about a
so just
million.
under 5.5 million. Yeah.
Okay. So the other 14.5 million or so was spread out over two other companies.
Yeah.
Cool. That's that's awesome. So why is this company the right company for you right now to be running and to be building?
Well, I spent my life in the world of restaurants, and so
Yeah.
the businesses that I had prior to Creatures of Habit were both restaurant companies that I
Okay.
started. One in 2010 called the Meatball Shop, and I
Okay.
sold that business in 2015, and then another, or excuse me, in late 2014, and then I launched a business called Seymour's, which I sold in late 2019.
Okay.
So, I ran restaurants for 10 years. Excuse me, I opened up 13 restaurants over the course of that 10-year period.
Wow.
And then prior to opening my own restaurants, I opened my first one when I was 28. So from about 12 to 28, I worked in restaurants across all different
Yeah.
positions. So additionally, throughout my process of being an entrepreneur, I got married and ultimately had some kids. And when I sold my last business in 2019, my thought process was I was just going to open up another restaurant. I learned through the process of scaling 13 restaurants that I didn't love the process of opening up multiple
Mm.
brick and mortar stores,
Yeah.
specifically restaurants, because it takes on average 45 human beings to run a restaurant.
That's crazy.
And yeah. And so at one point, I had something like 700 employees,
Hmm.
which is just insane. And though I love people more than anything, I mean, people are my superpower. I love people. I
Yeah.
just knew that I would prefer having a little bit more of a control over the businesses that I was running, and I just didn't want to have that many employees. That's the truth.
Yeah.
So I thought my next move was gonna be to open up another restaurant, and I was gonna use that restaurant as an incubator for a line of consumer packaged goods because I
Okay.
wanted to own a CPG company.
Yeah.
But I always just, because of my history and my tenure in the restaurant industry, I thought that it was like the best thing to do was start with the medium that I knew best, which is
Yeah.
restaurant, and then scale from there in
Yeah.
CPG. The pandemic hit,
Yeah.
and nobody was leaving their apartments, let alone going out to eat.
Right.
And all of these restaurants that I opened up were in New York City.
Yeah.
And the city shut down. So I had to really think about my career. And I knew that I didn't want to scale restaurants anymore. I knew that I wanted to be home more at night for my wife and kids because I was not home
Yeah.
at night. And I thought that this was an opportunity for me to make a pivot into a business that would allow me to have more of a controlled team,
Yeah.
and also be at home for dinner,
Yeah.
and be like the dad that I always wanted to have.
That's awesome.
And so that's really what was the um the impetus for creating Creatures of Habit as we know it now. It's a CPG
Yeah.
brand, and we sell predominantly direct to consumer and through Amazon, and then
Yeah.
ultimately will scale into retail.
Yeah. And Creatures of Habit sells just a quick, what are you guys selling? I know you're doing kind of more
Yeah,
protein
so
centric products.
Creatures of Habit is a nutritional wellness brand. We're rooted
Yeah.
in nutritional healthy habits
Yeah.
and that are convenient. And so we launched the business with a product called Meal One, which
Yeah.
is a high protein overnight oatmeal, and it also has some vitamins, and it's sort of like it's got vitamin D3, omega 3 fatty acids, a probiotic and digestive enzymes, and 30 grams of plant-based protein.
Yeah.
So it's this sort of all-in-one morning power stack,
Yeah.
that just fuels you through the day. And so we started with that product because that was what I ate every single day for almost 15 years before I launched the business.
Yeah.
And then I would have my supplements on the side. And so
Yeah.
the idea was, if I can get my supplements into a pouch with oatmeal and
Yeah.
protein, this would be a great business. So we launched
Yeah.
with that, and then around a little over 2 years ago, we introduced a sleep support product called Creature
Okay.
Sleep, which
Okay.
is our sleep support hot chocolate. And then to close the loop on this wake up to wind down story,
Yeah.
was my initial vision of Creatures of Habit. We just launched a protein bar that has 3 grams of
Okay.
creatine. So,
Cool.
protein centric, clean ingredient, nutritional habits that are easy to implement into your life in a convenient way.
Awesome. That's amazing. So, for all the companies you've raised, how has your process changed from the first dollars you raised, of the 20 million you've raised? How has your process evolved for fundraising over the years? Compared now, like, hey, you're going to go raise $3 million for Creatures of Habit. How do you approach that differently than the first time you fundraised?
Well, so if I'm being totally transparent, I mean, the majority of the funds that I've raised to date have
Hmm.
been through high net worth individuals.
Yes.
And that's kind of how I've always done it, because I have a pretty expansive network,
Yeah.
and quite frankly, like, I've tried to stay away from venture
Yeah.
and private equity.
Yeah.
However, in this next round of funding that we'll end up doing for Creatures of Habit to support our retail rollout,
Hmm.
I'm actually excited to get in front of venture,
Yeah.
because I think finding the right venture partner is something that I will absolutely need. And
Yeah.
and I have a business now with Creatures of Habit that's getting real traction, and has velocity. Finding the right venture partner, I don't think, is going to be super challenging.
Yeah.
So my next round will be a very new approach, as
Yeah.
opposed to my prior rounds where I've sort of connected with or tapped some high net worth individuals that I
Yeah.
know that support me. And one thing that I will just say to anybody listening, like, from my experience, what I've learned is that, no matter what, you have to have a great product. Like, that is for sure. You have to have a great product. But a great product with a bad entrepreneur is never going to win. And
Yeah.
so my emotional intelligence and my ability to connect with human beings and um, have them believe in me
Yeah.
has been my success path in business, and also in raising
Okay.
capital.
Yeah. So in raising capital, what is your process? I know we're going to go into the venture world next. You previously worked with a lot of accredited investors. You've done a Reg CF. We'll get to that in a second. But what is your process for figuring out how much you're going to raise, who you're going to target, and then how do you go about pitching them?
Yeah, so I basically build out a pro forma is the first thing
Okay.
I do. And
Okay.
so we build out a pro forma and we understand what it's going to take to, raising for a restaurant is different than raising
Yeah.
for a CPG brand, but in all business, in my, I think people kind of poo poo the business plan these days, but like, I guess I'm a little old school that way. Like, I always draw up a business plan.
Yeah.
And part of that business plan is the financial package. And in that financial package is a pro forma and projections for 3 years. And, and so we kind of build out a pro forma and we raise money, um, against first year projections,
Yeah.
and then typically, what I like to do is I like to have at minimum 6 months of operating capital on the balance sheet, at all times, so that we are not caught in a position where we are forced to have to raise. I like to think of raising money as like raise when you can, not when you have to. You know,
Yeah.
and so
Absolutely.
and so, the way I do it is, we build out a performa, we back out how much money we think we're going to need to be able to perform what we have put on paper, and then we buffer it with a 6 months of operating capital to make sure that, if sales don't hit the way we hope them to,
Yeah.
we will be, we're not going to be in a flutter.
So how did you come up with like so you have the pro forma, you're raising it, you know, next year's sales. How do you come up with valuation? Are you basing that on the EBITDA number or are you just saying like, hey, here's kind of valuations for similar companies? Like how are you guys coming up with the valuation?
Yeah, I mean, we look at comps, right? We look at
Hmm.
comps and look at the end of the day, right? Pre-revenue business is like it's really difficult to
Yeah,
to value the business unless you have someone that is either a sort of, you know, established investor that does
yeah,
this all the time, that wants to lead the round and
yeah,
price the round. And so I came out, for instance, with Creatures of Habit based on my projections, based on the comps, based on the research that I did on 12 months,
yeah.
on a 12-month projection. I valued the business pre-revenue at $7.5 million.
Okay.
I pitched it to Gary Vaynerchuk.
Hmm.
Gary Vaynerchuk loved the business. And because he got involved first and led the first pre revenue seed round, he said, I'm going to price the round
Yeah.
at $10 million dollars
Okay.
and bring in a bunch of investors to follow suit. And
Yeah.
so that's how we raised money for Creatures of Habit. That was the how we came to the valuation. Gary stood behind it,
Yeah.
and you
Yeah.
know
So you got a lead or anchor investor and
yeah,
it,
look, it was scary
yeah.
for me, right?
Oh, I'm sure.
Because now I'm looking to perform at a $7.5 million valuation,
Yeah.
and he's like, no, you're going to perform at a 10.
Yeah.
And so I was forced to kind of do that.
Yeah.
And it was obviously nice for Gary to come in and believe that that was what the company was worth, and what he wanted to invest against. um and so we did that, and
Yeah.
we were able to perform and get there. And we just raised around, that we kicked off about whatever we kicked off about 3.5 years in, at
Yeah.
16 million. So there's obvious growth there, and we
Yeah.
raised and finished that round.
Yeah.
So
Absolutely. So here's a question. So you've talked about kind of high net worth individuals or, kind of celebrity investors, quote unquote. Um, when you're fundraising, are you only reaching out to people when you're fundraising, or are you constantly building that network of potential investors at all times?
I'm never not fundraising.
Yeah.
And
No,
not
yeah,
not saying
absolutely.
that I'm always I'm not
Yeah.
always taking checks, but as the CEO of the company, it is my duty, fiduciary duty, to make
Yeah.
sure that the company is always going to be
Yeah.
sound and solvent. And so, you know, I'm constantly meeting people that I'm planting seeds with, for down the road investment
Yeah.
opportunities.
Yeah. Because I think the common misconception is you should reach out when you need money. But I think some of the most successful fundraisers I have seen are when somebody's constantly reaching out and informing people of the growth of where we're at. This is what's going on. And then it's, hey, we're going to raise money. And you've kind of whet everybody's appetite for, 6 to 12 months. And all of a sudden, all the money comes in overnight. Do you know Davis Smith at Cotopaxi?
No.
So he was telling me that at one point they were fundraising. They had like 150 people on their investor update they would send out every month, basically letting everybody know how much they were growing, all these like metrics. And to that group, he said, "Hey, we're fundraising this much money." He said they closed the round in 6 hours. But it's because all the groundwork they put in before they invested is that's what really matters at the end of the day, is
Yep.
what you're doing before. So awesome. So what is for you, what is the hardest part of fundraising?
Great question. I used to think the hardest part of fundraising was getting the no's, you know,
Yeah.
but now, because there's so many no's,
Yes.
when fundraising, I mean, there's so many no's. But actually, I kind of look forward to the no's, because the more no's you get, the closer you are to a yes. And that's kind of the
Absolutely.
way I see it. And
Yeah.
so I walk into every fundraising pitch like totally optimistic and confident, not overly confident, but like
Yeah.
whether they say yes or say no, it's always a great experience for me and an
Yeah.
opportunity to either learn or to be better or to close the deal. Right.
Yeah.
And so I think probably the hardest part is I mean, one of the challenges is getting your deck together
Yeah.
and feeling really strong about your deck and knowing what to put in, what not to put in. Um, because like most people they see decks all day long, right?
Yeah.
And so making a deck that's compelling is um is an art. It's an art form, right? And
Yeah.
so that's definitely, I spend an enormous amount of time focusing on what the deck looks like,
Yeah.
how it reads. It's almost like a menu, right? Like, the way human behavior is somewhat habitual,
Yeah.
and understanding how humans receive something like a pitch deck is like, really, like I said, it's a science and an art at the same time. And so yeah, so I think that's a challenge, because it takes a lot of time, it takes a lot of people's input.
Yeah.
You can't, I never try to just tackle it myself. Like, I have a lot of people work with me on the deck, from finance to ops to marketing to owned and earned organic. Like, everybody is working together on
Yeah.
it and trying to wrangle everybody, and the designer, and it's a lot. So I think that that's definitely a piece, that is, and then, quite frankly, because I love talking to people so much, and because I like feel I'm pretty confident in the room, um, the raising part is not, like, the pitching is not the
Yeah.
hard part for me. Um, I think that also, like, if you are trying to get a round closed at a certain time, because a lot of rounds have sort of like
Yeah.
a date that you're trying to
Yeah.
close it by, it gets very stressful if you haven't raised all the money and you're creeping closer and closer to that date. And then you potentially have to put an extension on, and then you've
Yeah.
got to write all the investors that, hey, we're going to change, we're making an amendment to the operating agreement,
Yeah.
or the shareholder agreement. That stuff is a bit of a challenge. But look, if I feel really lucky and blessed and grateful that, like, every round that I've set out to raise throughout my career, I've closed.
Yeah. That's
Um,
impressive. That's
Yeah.
impressive. Not everyone can say every time I've tried to raise money, I've been able to raise money.
Yeah, I mean, it hasn't always happened in the time frame
Yeah.
that I'd hoped that it had happened in, but it always ends up closing at the number, you
Yeah.
know.
So when you go into a pitch, do you have an idea of like, okay, it's going to take so many no's before I get a yes? Or do you just kind of go in saying like, it could go either way? When you're doing your process, you're like, okay, we need to te speak to 100 people because my batting average is 30% and we'll close 30 people and that's what we
I
need. Is
walk
that how
into
you think about it?
I walk into every single pitch with thinking that I'm getting a yes.
Okay.
Every one. Every single one. You know, it's kind of like it's like sports, you know?
Yeah.
It's like every time you get on the field, even though you may know that you're facing a much more difficult, like a challenging opponent, you don't walk onto the field thinking you're going to lose. You
Yeah.
know, you walk onto the field being like, we're going to do everything in our power to win this one. And
Absolutely.
that's exactly how I kind of approach raising money. You know,
Okay.
it's a sport, it's not for everyone. It's hard as hell. It's
Yeah.
just
Yeah.
hard. It's just hard. And the role of the CEO in many cases is spending a lot of time raising money, you know.
Yeah. Your job is to make sure you have enough money. And whether you get that from sales or you get that from investors, you got to get that. Um, that's awesome. So you've done a Reg CF, right? You've only done one, right? Had you done one previously?
No, no, and I'd never really thought about crowdfunding before until a buddy of mine said, "Hey, have you ever thought of this?" And I was like, "Well, we're not really looking to raise money right now, but does that matter?" In my mind, I was like, I always kind of thought of crowdfunding as like a last ditch effort
Yeah.
or like early days
Yeah. Yeah.
startup. And what I learned was that crowdfunding, if you have a community of people that love your brand,
Yeah.
giving them an opportunity to be an owner in it is like a real reward for not a lot
Yeah.
of money, right?
Yeah.
You're
Absolutely.
not asking for lots of money in a crowdfund. You know,
Yeah.
the smallest investment I think was $300. And
Yeah.
so if I can go to the community and say, "Hey, you guys have gotten us this far by
Mhm.
being customers,
Yeah.
why don't you hop on the ship with us and become part of this business in a more intimate way as an owner?"
Yeah.
In my opinion, like ever put it this way, since I have launched my own crowd fund with Creatures of Habit, I have now invested in many different crowd funds
Really?
because I'm like, yeah, because it's not a lot of money.
Yeah.
And it's like if you love these brands and you believe in them,
Yeah.
like you could throw $1,000 into a brand, and who knows, down the road, that $1,000 could turn into 10 grand, right? Like
Yeah.
it's a simple process. It feels kind of good to do it as a business owner, knowing that like you're telling your greatest fans like, hey, like, it'd be
Yeah.
like if I'm a New York Giants fan. If the New York Giants were like, "Hey,
Oh yeah.
you can invest in the team," I'd be like, $500, I'm in.
Yeah.
You know,
Yeah. Give me my
um,
stock certificate. Yeah.
yeah, yeah. So
100%. So so it's great about connecting with your following, bringing them in more. What was the most difficult thing about that process that you learned or that you had to deal with? Or just I mean, will you do it again? Because it is
you,
relatively new since it's only been around since about 2008. The Jobs Act opened up equity crowdfunding for unaccredited investors, basically. So it's relatively new. Most people are not using it. They kind of like they view it as something that somebody else needs to do, But it's really starting to grow in popularity, especially as accredited investors have pulled back from investing. So what was the hardest thing about it for you? Would you do it
yeah.
again? Would you recommend it to other people?
Setting up a Reg CF is basically going through the process of what it would take to take your company public in
Yeah,
terms of compliance with the SEC and all that stuff.
yeah,
That process was, I mean, it was a lot of work.
Yeah.
It was like there were moments in throughout the process where I was like, I don't know, man, this is a lot. Like they
Yeah.
want, these platforms, they ask for just an enormous amount of content,
Yeah.
information, documentation. And so it was a bit of a distraction for us, getting it all set up and ready to go.
Hmm.
And then on the backside of it, I will say, there are a lot of perks that these platforms highly recommend you offer to the
Yeah.
investors. And organizing that on the back end has been challenging, making sure
Yeah.
that all the investors, all of the perks, everybody's bucketed into their tiers. You get
Hmm.
everything out. It's a lot. So
Yeah.
will I do it again? I may. I may. I mean, the community really showed up. We raised $900,000 in 11 or 12 weeks,
It's crazy.
which was awesome, and all from the Creatures of Habit community.
That's
I will
insane.
also say that like the platforms also kind of sell you a little bit of a dog and pony show. As you're signing up, and they say, you'll come, if you can come to the table with like 30 to 50% of the raise ask within the first 6 weeks, our community of 750,000 investors are going to close it out for you.
Hmm.
And that simply just didn't happen
Hmm.
at all.
Interesting.
Like that didn't happen at all. And so, it was all 90% of the funds in were all from the Creatures community and my network.
Yeah.
So, you know, all in all, great experience. We raised
Yeah.
$900,000. There's a lot of investors in Creatures of Habit right now
Yeah.
that are rooting from the
Yeah.
sidelines for us, as owners now, and so
Yeah.
I'm very proud of that. But I do think that the process and the platform was a little bit of a challenge.
Absolutely. So so you have these investors, most of them came out of sounds like most of them came from your network or from your customer base. Are you engaging them are you trying to engage them more than you are engaging the rest of your customers to keep them locked in as investors, kind of make them like super spokesmen or anything like that? Have you guys started to look at how you can leverage them to help, with more projects you guys are doing, not necessarily as investors, but more as just like, hey, you put in money, you're an investor. How about let's scale? Like, how can are you guys looking at that? Have you tried to solve anything around that?
Yeah, I mean, I've done something that a lot of crowdfund companies that crowdfund that chooses not to do,
Hmm.
and I include all of those investors in our quarterly investor update.
Okay. Wow. Because
Um,
you don't need to do that. You only need to send out like a once a year update. But so you're sending them what you're sending Gary Vanderchuk then.
mhm.
That's amazing.
And I think just making them feel
Yeah.
that way is like
Oh
a
yeah.
very it's a powerful thing to do for them,
Yeah.
because most of them have never invested in a business before.
Oh yeah.
So
Yeah.
being able to see what it is being a real investor, in my opinion, is a really cool thing to offer them, just in
Yeah.
terms of education, right? um and then our plan is to really sort of tap into them, um over the the first quarter of the year.
Yeah.
uh we closed the round at the end of October, so we're still figuring out the bonus equity incentives
Yeah.
and
Yeah.
getting perks out. So really, in the beginning of the year, we're going to really tap into them and ask them to support and tell all their friends.
That's
And
awesome.
you know we're going to offer really cool referral programs for them.
Absolutely. That's cool. That's amazing. So thank you for your time, Michael. Don't want to take too much of your time. You are super busy. Last question. What's the best piece of fundraising advice you've ever received?
The best piece of fundraising advice I have ever received. Oh, good question. I mean, I think I said it before. A lot of savvy investors will require a good product, service, or establishment as the base foundation of what
Yeah.
they look at. Um, the financials need to make sense, but if you try to uh and this was advice that I got early on, like if you try to put out a financial package that just is like way too
Yeah,
optimistic, it's not going to fly with most investors, especially
yeah,
the savvy ones. But I do think the most important piece, and this was, this is what Gary said to me out the gate. He said, in businesses that I invest in and I believe in, I'm always betting on the jockey and not the
yeah,
horse.
yeah,
And I think that is a very, very important piece for anybody looking to raise money to consider. Like the entrepreneur is what these investors tend to want to invest in, because they want to have a sense of confidence in the entrepreneur, that like
yeah,
no matter what happens, they're going to fight,
yeah.
and they're
They'll
going to
give
fight with
everything.
us. Yeah, they're going to fight with a smile on their face, and they're not going to there's not a lot of drama.
Yeah,
And like, and that's kind of been what I've seen to be true.
very
You know,
cool. Yeah, be the jockey people want to bet on. I love that. That's awesome because it is a bet at the end of the day. When people give you money, they're betting it, and it's either they get it back plus what plus their return or they don't. And I think that's awesome. Well, thank you, Michael. I'm excited to see what your next fundraise happens and to be a part of it however I can. Thanks for your time. Awesome.
Joe, thanks so much for having me, man.